Hey, welcome to the Explainer. Today, we're going to tackle the stock market. You hear that phrase and you probably picture this super complex world, walled off by experts. But I promise you, the main idea behind it is actually surprisingly simple. Let's dive in. So let's get right to the biggest question on everyone's mind. Is this whole thing just a complicated game for Wall Street pros? Do you need some fancy finance degree just to play? It's a fair question, but the real answer might surprise you. Because when you strip away all the jargon and the scary-looking charts, the stock market isn't about algorithms. It's a very human story that's over 400 years old. It's a story about people coming together to fund amazing adventures. And, as you're about to see, you're invited to be part of the next chapter. To really get it, we've got to go back, way back, to the beginning, to a story about how a really big problem led to one of the most powerful financial ideas in all of history. Okay, picture this. It's the 1600s. The Dutch East India Company is basically the Amazon of its day. We're talking hundreds of ships sailing all over the globe, trading in priceless goods like gold, spices, and silks. It was a massive operation. But here's the catch. Running a fleet like that, it costs a fortune. It was unbelievably expensive, and every single voyage was a huge financial risk. They desperately needed a new way to pay for these trips without risking everything every single time a ship hit a storm. And their solution was, well, it was genius. They turned to everyday people, regular citizens, and they offered them a deal. They said, hey, invest your money with us to help fund a voyage, and if it's successful, you'll get a piece of the profits. They sold these shares in coffee houses, in ports, letting anyone become a partner in the adventure. And just like that, the world's first stock market was born. Right there. It came from this basic need to share both the risk and the reward. And that fundamental idea, pooling our money to build something bigger than ourselves and then all sharing in the profits, that is still the engine that drives the market today. So how did we get from selling shares for spice trading ships to the instant digital markets we have now? Well, things are definitely a bit more complex, but the core idea, it's exactly the same. Let's walk through a modern example. Imagine there's a fantastic local coffee company. Everybody loves it. They have huge dreams, they want to open more shops, buy better roasters, maybe even go global. But to do that, they need cash, a lot more cash than they have just lying around. They need investors. This is how that journey to the market works today. First, they pitch their idea to big professional investors. If those investors are in, they help the company launch something called an IPO, or initial public offering. Think of it like a grand opening party for the company on the stock market. It's the very first time that the public, people like you and me, can actually buy a piece of that company. And this right here is the most important part. When you buy stock, you aren't just gambling on a number going up or down. You are literally buying a small piece of that business. You become a partial owner. Your money helps them hire more people, invent new things, and grow. You are a partner in their future success. Okay, so you're a partial owner. Cool. But why on earth do the prices of these shares bounce around so much every day? It all comes down to a really simple concept, kind of like a seesaw. Here's how it works. If a lot of people get excited about that coffee company and want to buy its stock, demand goes up. More buyers than sellers means the price of each share gets pushed higher, and the whole company becomes more valuable. But if something happens and people get worried, more of them will want to sell. Demand falls, the price drops, and the company's value goes down with it. It's this constant balancing act, all day, every day.
So, what causes the seesaw to move? Well, pretty much anything and everything. The price of coffee beans could go up. A competitor could invent some amazing new brewing machine. The company could get some bad press or hire a brilliant new CEO. Even big picture stuff like new laws can shift the balance. All of this together creates what traders call the day-to-day noise of the market.
Now, all this noise can be super distracting and, frankly, a little nerve-wracking. It leads to the most important question of all. How do you deal with these constant ups and downs? Well, the answer is all about changing your perspective. The single trickiest thing to predict in the market isn't a company's earnings. It's human emotion, confidence, fear, hype. These feelings make people react to all that daily noise. They buy high when they're excited and they sell low when they panic. And let me tell you, that emotional roller coaster is one of the biggest traps for any investor.
And that brings us to what is easily the most important piece of wisdom in this whole explainer. The vast majority of financial pros all agree on this. The goal isn't trying to time the market to make a quick buck. The proven strategy is patient long-term investing. It's about choosing good businesses you believe in and then having the patience to ride out all that day-to-day noise.
So, we've gone from 17th century sailing ships all the way to modern market psychology. Now, let's bring it all back home. What does this mean for you, for your own journey?
Honestly, the best part of this whole story is that today, the game has totally changed. The stock market isn't some exclusive club anymore. Because of the internet, the tools that were once only for the super rich are now available to pretty much everyone. You can actually be a part of it. So what does that first step even look like? Well, it starts with exactly what you're doing right now. Learning. It's about finding businesses that you actually understand and believe in for the long haul. And really, it's about using this amazing tool to help you get closer to your own financial goals, whatever they may be.
The stock market started as a story of shared adventure and shared success. It's a 400-year-old story that is still being written every single day. So now that you know how the story began, the only question left is, what's your next chapter going to be?